Good morning, you're watching Businessworld Live. I'm Jes Delos Santos and here are the biggest stories to kickstart this trading day, Wednesday. Your favorite snacks and other food products may soon become more expensive as flour and sugar prices continue to increase. The Philippine Chamber of Commerce and Industry raises concerns over the peso's further weakening against the dollar.
During my meeting with the incoming Secretary of Trade and Industry, I said that this is something to be worried about.
Now, worries over a weak peso drag the local bourse below 6,300. And Enrique Razon's infrastructure and energy holding firm, Prime Infra, has filed for a 28 billion peso initial public offering. We begin our broadcast with commodity prices seeing another round of increases, making food items even more expensive. Shaila Francisco with the rest of the story.
Prices of some bread products in this Quezon City bakery have gone up by 10 to 15 pesos. But retailers and owners say these were hikes implemented in tranches as they can't afford to do big-time increases.
Kahit na mataas ng ingredient, saka transport cost, lahat-lahat yan, pati fuel cost, kailangan konti lang ang taas namin, hindi pwedeng mataas sobra kasi ang problema kung itaas sobra ang presyo ng tinapay, pandesal and other basic foods, baka mawalan kami ng customer.
Some bakeries say costs of raw materials have become more expensive all at the same time. Flour price for one is now up by 40 to 140 pesos and is still bound to increase further due to tightness in the supply of wheat. Aside from drought conditions in source countries, wheat supply is affected by India's export ban, as well as the Ukraine-Russia tension, which are blocking shipments.
There is so much wheat in the world,
Yes.
but more than half of it is unable to go out for export. Okay?
Dahil sa
Between the two of them, Russia and Ukraine, they have about 30 to 40% of the exportable wheat in the world.
Wow.
But that is not available right now.
Problem is 100% of the country's supply is imported. That is why, aside from bread, supply of cakes, cookies, lumpia wrapper, instant noodles, pasta, ice cream cones, and red hot dogs can be affected.
Whatever government actions are made would only temporarily alleviate the pricing situation so long as the war in Ukraine and Russia continues. Hanggat hindi tumitigil yung away na yan, the prices of wheat will continue to go up. Remember, Russia is also the world's biggest exporter of gas
And fertilizer. Number one in the
So,
world.
other things are also going up. Sabay-sabay yan eh. Connected yan eh.
Sugar, meanwhile, now costs up to 90 pesos per kilo. United Sugar Producers Federation says this is due to higher fuel, fertilizer, and labor costs. While the government also gave its go signal to import 200,000 metric tons of sugar, the group said it went straight to industrial users, including manufacturers and soft drink companies.
So yun ang problema. Bakit sa kanila lang binigay? At bakit hindi binigay sa mga local market vendors, hindi binigay sa mga bakeries? Those are the people who need it most.
The DA, however, has this to say.
Kasi nung panahon na yan, yun ang nangangailangan. Even now, the industry needs sugar. Eh kung walang sugar, apektado ang industry din. So that's why they were balancing their actions. We were balancing our actions, not only for the consuming public, but for the industry that also needs sugar.
The Sugar Regulatory Administration says prices would not have shot up if not for the temporary restraining order filed by the Mata's camp. Still, the agency will monitor the supply of sugar and will fast-track requests for clearance to import the commodity. For News 5, Shaila Francisco, we are One News.
Outgoing Agriculture Chief William Dar is willing to assist incoming President and Agriculture Secretary Ferdinand Marcos Jr. in addressing the looming food crisis in the Philippines. Mobile journalist Pamela Vasquez with the details.
Outgoing Agriculture Secretary William Dar says that while he's supportive of President-elect Bongbong Marcos's goal of bringing down the price of rice to 27 pesos and 50 cents, seems to be the furthest we can go right now.
The nearest we can go by now, 27 pesos 50 centavos. To be more practical with the setting we have in the country, by the end of 6 years, that will be a formidable legacy of the administration.
The DA has long been warning of a food crisis, brought about by the twin problems of the war in Ukraine and continuing pandemic. It predicts food prices across the board will continue to increase in the coming months.
This coming 6 months. The main reason is the increase in production costs. The increase is about average of 3.13 pesos per kilogram of rice. So tumaas na talaga.
Based on the DA's estimates, in order to bring down the price of rice to about 20 pesos a kilo immediately, the government will need to provide around 245 billion pesos in subsidies. Secretary Dar says they've come up with suggestions on cutting prices to the level that the incoming president wants.
We are more than willing to brief and assist President-elect Marcos in our joint aspiration to attain food security and ultimately food sovereignty.
But at the same time, Marcos has already indicated he wants to reorganize the agency. He pointed out that were offices under the DA that were underutilized and needed to be retooled. Mobile journalist Pamela Vasquez, We Are One News.
The country's largest business group expresses fear over the weak peso, noting that it may lead to further spikes in prices of commodities. PCCI President George Barcelon says prices of goods may rise on the back of weakening peso because businessmen will have to spend more for importation. The local currency closed at 54.265 against the greenback on Tuesday. This is the weakest exchange rate in over 3 years, and just this morning, the peso opened at 54.30. It even dropped to 17-year low of 54.48 against the dollar.
Yung mga chain effect sa mga bagay, no? Mga transportation, mga cost of productions, yung mga importation ng raw material. Subsequently, yun din ang effect. Tataas siya ng without any added factors just because of the exchange rate. During my meeting with the incoming Secretary of Trade and Industry, I said that this is something to be worried about. Sa ngayon, the businessman has been quite concerned, but many are just holding on. Not increasing prices. But with this increase, sa tingin ko, mahirapan na, maski na mga public transportation.
With the peso weakening further against the dollar ahead of the central bank policy meeting on Thursday, should we expect the peso to lose more ground? Let's get insights from Nicky Mapa, senior economist from ING Bank Manila. Nicky, good morning. Thank you for joining us.
Hey, Jester. Thanks for having me.
Okay, first, let's kick things off with this particular train of thought. Is the myth true? Is a weak peso good for OFW families?
Well, I guess in terms of purchasing power, with the exchange rate moving the way it's been moving, each dollar gets their beneficiaries a little more peso bang for their buck. On the flip side, imported inflation is causing the price of goods and services to rise now by 5.4% and likely 6% in the next few months. So yes, they're beneficiaries of remittances get a little more peso, but because of the inflation dynamics, that purchasing power is probably just washed out.
Okay, definitely in a way, of course, offsetting those possible gains from remittances there. But like you heard George Bercelon earlier in the broadcast here from PCCI, worrying that, this might lead to further spike in prices. Which do you think are the industries most heavily affected here by the weakening of the currency?
Well, I think all, given the fact that we need transport sort of incorporated in goods and services, heavy commodities that we need to move around. I think these are all likely to see price increases as, given the fact that oil prices are here at these levels and here to stay, there's no way that these firms can continue to hold off on price increases anymore. And we're likely to see all these inflationary pressure continue to pervade. This is what they call second round effects. As firms have no choice but to increase prices and unfortunately pass it on to the consumer.
Okay, Nicky, of course, point of the conversation really is a weak peso. But on the flip side, give us an idea as well. Up to what level is a strong peso also bad?
Well, the whole argument that a strong peso erodes export competitiveness is, I guess, in theory grounded, because if your currency strengthens too much, your exports become relatively more expensive to world markets. But the Philippines has traditionally been an importing country. Therefore, we rely less on our export receipts for our, I guess, economic growth strategy. The goal of the BSP is to try to ensure that the peso is stable more than anything. Not so much that they favor a particular strengthening or weakening of the currency, but that it moves in line with market fundamentals and that the peso depreciation or appreciation can be orderly.
And then, Nicky, of course, you've also heard incoming BSP Governor Felipe Medalla saying that, this is a strong dollar problem, not so much a weak peso problem, in a way also shutting down critics who have said at least that, the peso dropped to a record low due to the BSP's dovishness on inflation. Your thoughts on that? And what do you think is a level that's going to at least worry the BSP here?
Yeah, just to his credit, we currently are in a strong dollar environment with the Fed increasing rates very aggressively. I guess the right level would be to have the peso, what they call the middle of the pack in terms of depreciation, or the middle of the pack with regard to appreciation in the region. Since he made those comments on June 10, the Philippine peso has been the worst performing currency, now down about 3%. I think we're trading at 54.60 now. These are multi-year lows or weakness for the peso. So yes, it's still a strong dollar theme, but the peso is clearly underperforming. And to think that this is nothing to do with the perceived dovishness of the BSP, I think we have to revisit that, given the fact that the currency is now the worst performing currency in the region.
Now, given that as well, of course, policy meeting coming up this week. I mean, you have Jokno and even Medalla himself signaling the possibility that they are more or less more keen to a 25 BP hike here. How do you think should the central bank move?
Well, personally, I think this is a sentiment shared by many analysts and market players, is that we need to see some show of force from the BSP. If they are really, I guess, adamant or intent on controlling inflation, there is the argument that the FX pass-through on inflation is relatively low. But given how the peso is performing and seeing how inflation is here, and it's not just cost push anymore. I think it's quite clear that demand side pressures are here. We need to see a little more, a show of force from the BSP that it's serious about fighting inflation. And then it wants to get back, because they've fallen so far behind the curve. I think they have to show some resolve that they're intent on getting at least or catching up with the rest of the curve.
Okay. what do you think now is a worst case scenario here when it comes to inflation here? Up to when do we see prices remaining elevated? Is it even possible to project a peak at this stage?
Very difficult given how we're likely, if we see the currency depreciate further, we'll have to tack on a little more on the peak for this year's inflation. Currently, I have the peak at 6.9% in October. So if we see the peso depreciating to 56, because it doesn't seem like the BSP seems to care about the currency or where it's headed, then we could see that head higher to 7%. So the entire situation we're experiencing right now has shades of 2018. If you remember back then, the peso weakened to 54.33. We've passed that. Interest rates moved up to 8.3% for the 10 years. But back then, the BSP was at 4.75%. Currently, we're at 2.25%. So just to see the disparity in policy response back then and now, I think that's quite telling. So maybe they need to take a page out of the playbook and try to review what they did back then, because clearly their strategy right now isn't going to cut it.
Wow, 6.9% at least by October. So far, that's your projection of a possible peak here when it comes to the inflation picture. For a better appreciation of our viewers, how is that scenario going to be like at 6.9%?
Well, when we start to see inflation at those levels, this is when we start to see inflation expectations or second round effects kick in further. There is no way that the authorities can hold off on petitions for wage increases, transport fare increases, and firms will just continue to pass along prices to consumers. So we're starting to enter a scenario where it starts to get ugly. And inflationary pressures become more entrenched. So far, we've sort of taken it on the chin. Consumption continues to be quite healthy. And I think this is something that the BSP has to see as well. A 50 basis point rate hike isn't going to kill the economy. So they have to consider, I think, at least showing some resolve to get ahead of the curve.
Okay, it's going to be definitely a tough task for the economic team, more so for the incoming president. This time, even him, of course, appointing himself as the incoming agriculture secretary. What are the main challenges here? What should he be focusing on, especially when it comes to food security here? And especially considering that he laid down a campaign promise of bringing down the price of rice to 20 pesos per kilo.
Yeah, well, I guess it's a good move for the incoming administration, showing that he's serious about improving the situation or that sector. Has been neglected for so many decades now. So I guess his decision to step in as the DA secretary might show some resolve or focus on getting the agricultural sector more productive. It's just coming at a very challenging time, given the fact that we heard from your previous segment that cost of inputs are really increasing. Fertilizer is more expensive, fuel is more expensive. So I guess the whole task is to try to improve efficiency, probably secure lower cost of inputs. But it's a very challenging time. But I guess the whole decision to step in and put focus on that is a good sign. Let's see if he can deliver.
Okay, we, of course, the rest of the country also on wait-and-see mode as to how he is going to perform as at least a temporary chief of the Agriculture Department. Thank you very much for your time this morning. Nicky Mapa, Senior Economist over at ING Bank Manila. Thank you, Nicky.
Thank you.
Now, the country's balance of payments deficit hit its highest level in 15 months in May. The shortfall last month stood at $1.6 billion, widening from the $1.4 billion gap a year ago and the $415 million deficit in April. The BSP said this mainly reflected outflows from the government's foreign currency withdrawals used to settle foreign debt obligations and expenditures. The BSP says it might need 2 to 3 years to accept new applications for digital banks. This as the regulator still needs to boost its capacity to regulate these kinds of lenders, according to its incoming chief. BSP incoming Governor Felipe Medalla said they need more examiners and experts to regulate and to protect the public. Medalla said the BSP should further develop its capacity to regulate digital banks before allowing rapid expansion. Recall that the Bangko Sentral earlier capped the number of digital banking licenses to 6 last year after the remaining applicants failed to meet the requirements. Pausing for a quick break, but coming right up after that. We'll check how the local bourse is performing this morning after it dropped below 6,300 on yesterday's trade. More of that and other stories when Business World Live returns. Stay with us. Da, da, da.
13. Ayan. Okay ah. In case you
Grabe,
needed.
oh. Okay, yan. Bumaba ulit.
Okay, we're good. Okay, kuya.
Sige. Hindi ako.
Kuya, after mo mag-market, urong ka lang dito. Banda.
Saan dito?
Diyan. Yan. Ay. Ayan, direct. Yan, okay yan. Yan. After mo ng market, ha? Habang nagpipick
you're still watching Business World Live here on One News. I'm Jes Delos Santos. And fittingly, of course, we kick things off with the peso after it flirted with a 17-year low on Tuesday at 54.265, but it did brush off on that level earlier in the trading day at 54.45. But as you can see right here, on this chart, you'd see the peso at least somehow strengthening a bit after hitting that 54.45 level. But as you can see as well, nearing that 17-year low yet again at 54.438. Earlier, of course, during our broadcast, we had Nicky, Mapa of ING Manila saying, that this is going to be a bit of a worrying scenario here. In fact, he even sees the peso possibly hitting at 56 level. That's going to be a worrisome picture here for the local currency. This comes ahead, of course, of the BSP policy meeting this week with both incoming BSP Governor Felipe Medalla and outgoing BSP Chief Ben Jokno signaling that they are taking time when it comes to policy tightening as they favor a 25 beep hike this week. Pressure is going to be on the peso in anticipation of the central bank's next move, resulting in cautious trading on Tuesday. You have the PSEI sinking below the 6,300 level yesterday, now at 6,279, sinking even further. As you can see right here, the index is down at least close to 0.1%. Japet Tantiangco of Philstock said on Tuesday that value turnover remaining low implies how investors are still choosing to stay on the sidelines. Again, you have the PSEI not experiencing any form of reprieve, at least on Wednesday's trade. Let's take a look at some of our leaders and laggards here. As you can see right here, you have a number of stocks, at least still looking like a mixed picture here for the main index. Converge still our best performer for today, up by 1.8%. Globe likewise also increasing here by 1.7%. Security Bank also up by 1.5%. However, let's focus our eyes on an Emperador here, at least on the upside, up by 1.2%. It says that its board has approved a plan to pursue a secondary listing on the Singapore Stock Exchange. The distiller announced back in April that it obtained conditional eligibility to list on the SGX. Bloomberg as well is reporting that the beverage maker is now gauging investor demand for the secondary listing based on terms of the deal obtained by Bloomberg. Again, Emperador, as you can see right here, so far in this trading day, up by 1.2%. Also, we have to be dishing out this bit of news here. You have Prime Infrastructure of the Razon Group, despite all the volatility in the market, deciding to actually launch its IPO. In fact, the biggest IPO we might be seeing this year for the local bourse. They are launching a 28 billion peso IPO with 1.93 billion shares on the table, with an over allotment option already included in that amount. Maximum price is set at 14 pesos and 60 centavos a share. The target is to do the offering period and the listing by October. The proceeds will be used for energy, water, and waste and sustainable fuels businesses of Prime Infrastructure. Recall that the company plans to build a facility including a solar project with 3,500 megawatts capacity, a battery energy storage system as well that can hold 4,500 megawatt hours. So far, however, let's try to check ICTSI, however, of the Razon Group down by 1.75%, one of our laggards in today's trade. Infrastructure spending picked up in April despite the ban on new projects ahead of the May elections. The Budget Department reports that infrastructure and other capital outlays rose by almost 10% to almost 64 billion pesos in April. This from the 58 billion pesos in the same month last year. But this figure is lower than the 100 billion peso spending recorded in March. The DBM attributes the higher spending to the payment of the Agriculture Department for the procurement of its farm equipment and machineries, as well as the DepEd for its basic education facilities. The implementation of DPWH's infrastructure projects also contributed to the higher spending, according to the DBM. Now, this from the Philippine Star. The country has raised over 453 billion pesos worth of taxes through the fuel marking program as of mid-June. The customs contributed the lion's share at over 420 billion pesos, while the remaining 29 billion pesos came from the BIR's collection. The two agencies have assessed a total of 43 billion liters of fuel. The fuel marking program seeks to curb potential oil smuggling. And that's a first look into the business day this Wednesday, June 22, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jes Delos Santos. Mask on, wash hands, and stay safe. Philippines, we are One News.